Despite what you might be hearing on the news and in other YouTube videos, the California housing market is not crashing. But if you're looking to buy a house or sell a house in California in the next couple of months, it's important that you pay attention to this video. We're going to go over the things that you need to know. There are some changes happening in California real estate that you need to be aware of. There's also some data, some numbers out there with regards to headlines that you should absolutely ignore. And we'll talk about why as we dive into the numbers. Existing home sales totaled just over 240,000 in December. That's down nearly 44.1% from a year ago. At the same time, we saw the median home price decline to 774,000, which is down just under 1% from November, but down 2.8% from December of 2021. But the thing to keep in mind with these numbers and with the headlines and the media and everything going on at the moment is that they're comparing the slowest housing market that we've seen in nearly 2 decades to the hottest housing market that we've ever seen on record. So when you compare a slowing housing market to a really hot housing market, the numbers are going to look dismal. And that's exactly what you're seeing right now with regards to these headlines. So instead of paying attention to, say, the headline, make sure you understand the context in the article. Why are the number of home sales down? Why is the median home price declining? Well, as many of you know, it's primarily due to housing affordability. In the latter part of 2021, early 2022, interest rates were sitting in the low 3% range. And we saw those interest rates climb to upwards of 7.5% by the middle of 2022, which affected the buying power for many potential home buyers out there because they could no longer afford the payment. Many could no longer qualify for the mortgage that they were once pre-approved for. And so those buyers had to drop out and sit on the sidelines. And because of that, we saw inventory continue to rise into the fourth quarter, which is typically a slower time in the market. Normally, inventory peaks sometime in the middle of summer. But because buyer demand was so sluggish and many sellers out there were still trying to catch the gold rush, if you will, the inventory numbers continued to rise, which gave the media more and more ammo to talk about a potential housing crash. When actually we were just coming off the hottest housing market that we've ever seen. Any deceleration in home buying, any slowdown in the housing market is going to look like the market is actually falling apart, when in all reality, we're starting to see more normal activity in the market. Yes, we've seen home prices pull back, and there are some people underwater. Some people that purchased in the first part of 2022 could potentially owe a little bit more on their property than it's actually worth. But that in no way means that there's a housing crash coming. Understand that those people locked in really, really low interest rates. So they might not be sitting on a ton of equity, but they are likely sitting on a much lower housing payment than something that you could get today. Now, the thing to keep in mind when it comes to talking about a crash or a collapse in home prices is supply and demand. And until supply exceeds demand, you're not going to have a big move across the board. In fact, in December, inventory fell to 970,000 homes nationwide. This was the 5th straight month of declines and down nearly 13.4% from November, leaving us with just 2.9 months of supply to end the year. But here's the thing, inventory is even tighter than that figure implies, as there are only 690,000 active listings in December, meaning that 29% of the inventory in the existing home sales report is under contract and not truly available. And as of today, mid-January, available inventory is sitting at 472,000. That's more or less where we've been over the last couple of weeks. So as we've come into the new year, inventory isn't really increasing on a nationwide basis. And we'll talk about that a little bit more in a minute, but inventory is up nearly 71% from a year ago, which is the lowest level of inventory we've ever started the year at. So a little bit of context there. Yeah, inventory is up 71%, but last year was more or less an anomaly when it comes to the number of available properties when starting a year. But here's the important thing. We're still down 43% from 2019, and 2019 was a more normal year with regards to real estate. Now, before we dive into more specifics on the California housing market, do me a favor, if you find any value in these videos at all, hit that thumbs up, as it definitely helps the YouTube algorithm, and feel free to subscribe to the channel to stay updated on everything real estate related. So for California, statewide home sales were down nearly 23% compared to 2021. So a lot less sales happening. At the same time, the median number of days it took to sell a home increased from 21 in 2001 to 28 in 2022. So it was taking longer to actually sell property. Surprise, surprise. At the same time, the statewide list to sales ratio went to 96.2% in 2022 compared to 101% in December of 2021. Now that's important to note because in 2021, homes were selling above the asking price. Many people were offering more than the house was worth in order to get under contract. But in 2022, that really only happened in the first quarter, the first half of 2022 for the most part, right? There were still people in some markets that had to offer more, but the majority of people were able to get the home for a little bit less than the asking price, but only at 96% on average. Notice I didn't say 50% or 40% or 30% like many people out there want you to believe. So yes, the housing market is slowing. Yes, some people out there are able to offer less on properties and get them under contract. But based on the sellers and the buyers that I'm currently working with, we're not seeing a lot of activity where people are getting major deals on property. We're seeing less competition in the market overall, but at the same time, mortgage demand has actually jumped 7% as interest rates fell back to the lowest levels since September. So what does that actually mean for you as a buyer, a seller, or a potential investor looking to buy real estate in California? Well, we're going to talk about that in just a minute, right after we go over the Orange County and San Diego housing data. So as of the time of filming this video, our inventory is sitting at 2,516 homes. This is actually down 14 homes since this time last week, when normally this is a time when we start to see inventory continue to trickle to the market. Not in a big way, but every day you add a couple of more properties, right? Because it's the first of the year, there's more and more people thinking about selling, and therefore the inventory numbers start to grow. But this year, a little bit different. This year is the second lowest level of mid-January inventory that we've seen since they started keeping track nearly 19 years ago. So we're not seeing this big flood of inventory come to the market yet. Now, inventory was sitting at much lower levels last year, just over 1,080 homes. So inventory is up considerably, but we're still well below the 3-year average of just over 4,600 homes that we would normally start the year with. Now, I do think inventory is going to continue to grow here in the next couple of months. I think it will likely peak at the end of summer, which is what we typically see, but I think you're going to start to see more homes come to the market around mid-February. That's when we traditionally see the housing market pick up. And I don't think this year is going to be any different, but I do think there's probably going to be less homes coming to the market than a normal year. And that's mostly due to interest rates. Many sellers out there that would be sellers have locked in super low rates, which means they have a super low mortgage payment. And so even if they're considering selling their property and buying something else, chances are they're going to have to take a higher rate on top of paying more for the new property than they probably paid for their current property. So it's going to be a more expensive move. So you're going to have to really, really want to move. And we're actually seeing something similar in San Diego. The numbers are just a little bit worse. In fact, San Diego inventory has actually dropped 178 homes over the last 2 weeks. So instead of seeing increasing inventory, you're actually seeing decreasing inventory, where the number of homes is sitting at 2,720. And that's compared to a 3-year average from 2017 to 2019 of just over 5,400 homes. So inventory is really, really depleted in San Diego. And so while the number of transactions is slowing and home prices are moderating and declining a little bit, you're not seeing any big crashes, and you're not likely to see any big crashes or any big collapse in home prices because you don't have that excess inventory. And while everybody wants to compare it to 2008, the reality is it's nothing like 2008. 2008 had a ton of issues, but one of the major issues it had was it had a ton of distressed sales. People that had to sell their property that owed way more on it than the home was worth. And so they were put in a position where they had to let the house go and or sell it for market value in order to get out of it. And because values had depleted so much, it became a distressed situation. This time, it's completely different. So what does that actually mean for you as a buyer or a seller here in California? I think as a buyer, you just need to be patient. There's not a lot of inventory out there. There's no need to rush out and buy something. Even though interest rates have declined a little bit, I think the reality is you're likely to see interest rates continue to move sideways, kind of stay in this range. And there's a high probability that as inflation continues to go down, interest rates follow. Now, I don't think you're going to see interest rates in the low 3% range again, but I do think there's a really good chance that you could see interest rates in the mid 5% range here in the next couple of months. Now, does that mean they're going to stay there the whole year? Does that mean that they're going to continue to trend down lower and lower? It's hard to say at this point, but I do think there's a really good chance that the Fed is going to pause as the data continues to support lower and lower inflation. And with that, there's a really good chance that interest rates go down. So as a buyer, there's no reason to get impatient, run out and buy something just because you've seen rates trickle a little bit lower. I think there's going to be more opportunity in the market. But at the same time, I do believe as some more inventory comes to the market, you're also going to see some more competition. There's a lot of home buyers that have been sitting on the sidelines waiting for the right home to come to the market and also waiting for interest rates to pull back a little bit. And many of them are looking at slightly lower house prices than they were, say, a year ago, even though interest rates might be a little bit higher. But I think a lot of those buyers are probably going to get off the fence as the market starts to heat up. Now, as a seller, if I were a seller in this market, I'd be thinking about putting my home on the market sooner than later. I think the spring market is going to be the best time of the year to sell your home for the most amount of money. And I believe there's some pent-up demand coming out of last year, those that I just mentioned that have been sitting on the sidelines, that will be ready as soon as the right home comes on the market. But at the same time, if you're a seller expecting to get prices that you saw this time last year, that's not going to happen for most people out there. The reality is home prices have softened a bit, so you just need to make sure when you're pricing your home, you're pricing it at fair market value, pricing it based on what the market is doing at the moment and not what it was doing 6-8 months ago. And if you're investing in real estate, it really comes down to, do the numbers make sense? Regardless of what's happening with house prices or interest rates, it really comes down to the numbers when you're making a purchase on an investment property. So if the numbers make sense, great, buy it. If the numbers don't make sense, then I'm not sure they're ever going to make sense just because of where house prices are. But regardless of what you decide to do, just make sure if you're buying a home, you're buying for the right reasons. You have that longer term time horizon. At this point, I'd be looking to stay in that house at least 5, probably 7 years. Not because I believe home prices are going to crash, but because we've seen so much appreciation over the last couple of years. I think you're going to see a sideways movement in the real estate market for the next couple of years, which means you're not going to see big appreciation. You're not going to see big declines in prices. They're just going to chug along a little bit. And with that said, if you're looking for a professional real estate to work with and you're here in Southern California, I would love the opportunity to help. You can actually get my contact information in the description below. And if you're somewhere else in California or nationwide and you want a professional real estate agent, do me a favor and check the link in the description. And you could be a buyer out there or a potential buyer where you're just not ready yet. You know you want to become a homeowner, but maybe you're 6 months, a year out, not sure where to start the process. I actually created a first-time home buyer course to guide you through the entire process from A to Z, and you can find that link below. And lastly, if you want to know where I think home prices are actually going to go, how many sales are going to happen, where interest rates are likely to end up, and you want to see my forecast, do me a favor and check out this video here.